Markets are moving, capital is recalibrating, and clarity matters more than ever. Each week we break down the 5 forces shaping commercial real estate: capital and rate, credit and lending, valuation and pricing, construction and cost, and capital flow and distress. This is CRE360 Weekly Market Intelligence, where data meets strategy and signals turn into action. Momentum is back on the runway. Yields eased, spreads narrow, and guidelines is leaning supportive. The 10 years is hovering near 4 and credit beta isn't blinking. This is execution territory. Disciplined entry, clear timeline, and tight contingency. If your plan is funded and your credit is clean, this is the time to move. Let's take a look at the data.
SOFR sits near 4.24%. Treasury yields dipped 2 to 5 basis points. 2-year at 3.48, 10-year at 4.01, confirming the easing trend. Futures price a 98% chance of a 25 basis point cut at the next FOMC meeting, with odds of another by year-end. Spreads firmer, BBBOAS 1.00, HY 2.96. Meanwhile, early October's surge in multifamily construction starts signals rising confidence in future financing conditions.
Credit is keeping a steady tempo. Desks are coding, but the metronome is strict. Structure does the heavy lifting. More interest-only deals, tighter covenants, and precise proceeds. The question isn't can you borrow, it's can your plan keep the beats. Let's take a look at the data.
The data this week shows minor but measurable movement. Benchmarks nudged wider. CMBS AAA 80 basis points. CRE CLO AAA 135. Senior loan spreads moved modestly higher, now near 200 basis points over base. Despite the spread shift, all-in mortgage coupons remain stable, 6.6% for conduit debt and 5.7 to 6% for core portfolio loans. Underwriting loosened only slightly. LTVs ticked up to 57%, with DSCR steady around 1.8 times and debt yields holding near 12.6%. Interest-only structures remain prevalent across nearly all new issuance, and the CMBS delinquency rate held at 7.23%, a stable print after last month's welcome pullback. The capital markets are watching the Fed, but they haven't stopped lending.
Valuation footing looks firm. Not a rally, but a stable ground that finally holds weight. With the long and near 4, focus shifts from defensive to selective offense. Discipline on basis and patience on income growth. That's the edge.
Indicative cap rates approximately 6.84%. Green Street's CPPI climbed another 0.2% in September, putting annual growth at 2.9%. MSCI/RCA plus 0.7%, MOM, approximately 2.6% YOY. Investor sentiment is unchanged. The majority still expect cap rates to compress over the next year. So far, valuation momentum is modest but persistent, confirming that the floor we discussed last week is holding.
Costs are holding in controlled tension. Materials are mixed, labor is tight but predictable. Schedules are workable if you respect the pressure. This phase rewards discipline, early buys, real contingencies, and frozen scopes. Let's take a look at the data and see what's the data for this week.
Turner's Building Cost Index is up 4.2% year over year, and ENR's 20-city index gained 3.2%, both steady from last week. Steel up modestly, lumber rebounded, concrete flat, skilled labor approximately plus 4.5% year over year. Backlog 8.5 months. Change orders inched higher as stalls eased. Together, the data confirm a controlled equilibrium. Cost inflation contained, backlog resilient, and execution pressure manageable. The question now is whether next week's Fed meeting will preserve that balance or tilt capital costs again.
The tide is moving, not surging. More bids, better conversation, a cleaner lane for private credit. Liquidity previous convention and clean stories. A sponsor with control win the channel. Let's take a look at this week's capital flow numbers.
Fresh MSCI figures show U.S. CRE investment volumes up 16% year over year in Q3, led by multifamily and industrial assets. TREP reports distressed loan balances inching to $118 billion, while special servicing exposure remains near its cycle peak. Fundraising edging up. Dry powder approximately $350 billion awaiting clarity. Capital is circulating again, but cautiously. Liquidity is building, not breaking loose.
Across every segment, one theme stands out. Capital is realigning, and precision is what separates action from noise. This cycle rewards discipline, not prediction. We will keep decoding the numbers so you can move with conviction, right here on CRE360 Weekly Market Intelligence. For deeper charts, data, and strategy, visit CRE360.ai. I'm Amit Shabazian. Thanks for watching. See you all next week, and stay positioned.